Thank you everybody for joining. We're bringing the band back together by popular request. We're going to do another 5 pre-IPO companies you need to know about. We did one of these sessions a little while back. We covered 5 companies. Everybody said, wow, that was a really good session. Can we do it again with more companies? So here we are. My name is Slava Rubin. I'm one of the founders here at Vincent. We're looking to democratize access to alternative investments like pre-IPO. And I have with me none other than the famous Jan-Erik from Sacra. Jan-Erik, say hi.
You're the famous one, but thank you. Hello, great to be back.
Absolutely. We're going to be covering 5 awesome companies. We'll dive into that in just a second. And this session is brought to you with our partner, the Fundrise Innovation Fund. Next slide. So before we get started, we covered this slide in our previous session, so we won't spend too much time. But pre-IPO is very active right now. There's a lot of companies valued at all kinds of incredible valuations, less public companies than ever. So all kinds of folks are trying to get into these in various ways. There's Reg D, SPVs, the Forex, and of course marketplaces. There's been a ton of activity in the last couple of weeks, really months, where you're seeing companies like Forge get bought, Equities and get bought. Industry Ventures just got bought by Goldman Sachs. So there's all kinds of action where folks are trying to get into this place of pre-IPO companies, trying to get more alpha earlier before these companies go public. So these are some of your options. And of course, Fundrise, our partner for today's session, is also one of your options via their 40 Act fund. With no further ado, let's dive into our 5 companies. So for today's menu, we have Ramp, OpenEvidence, Apptronik, Whop, and ShieldAI. I mean, we're covering all kinds of stuff here. Some of you know all of these 5 companies very deeply. Some of you might just know a couple of these companies, and some of these names are brand new to you. We're going from a fintech company to an AI company in the medical space to full-on robotics to a Gen Z commerce company to defense tech. So we're covering all types of industries. Let's take this moment to actually do a quick poll. So let's see if this can actually work. We're going to throw up a poll. There you go. So for all you folks in the audience, based on what you know right now, what little or much you know about each of these companies at their current valuations, whether you know it or not, which of these companies are you most bullish about? So try not to pick more than 3 companies. So we want to just see where your votes land right now. That doesn't mean that more expensive is most bullish, meaning where would you want to put your dollar right now? And we'll check again at the end of the session based on all the new information that you get. So let's give everybody 30 seconds to vote. Wow, I'm not even allowed to vote.
Damn. I was just gonna say I can't believe panelists can't vote.
We're not allowed to vote.
Shame.
So somebody asked the time frame. So, if you were looking to make money by 2030, or if you're looking to make money in the next year or two, whatever time horizon you would like to use, that you're most bullish, that you have your $100, your $1,000, your $1,000,000, however many zeros you want, which companies are you most bullish here? Maximum of 3. All right, 10 seconds left. Awesome. All right, here are the results. First place is ShieldAI, the defense tech company. Then you have Ramp, interesting. It's Apptronik actually a bit higher than that, and only one person picked Whop. Super interesting. All right, let's just put a pin in that and move forward with these 5 companies. So let's start with Ramp. All right, Jan-Erik, do you want to give us a quick overview on Ramp?
Definitely. So Ramp was founded back in 2019. The origins of the company for Ramp, also for competitor Brex, kind of are rooted in this idea of a startup credit card. The way it's always been is that as a startup, you might have a fair amount of cash in the bank from raising money, but you often don't have a lot of cash flow or revenue coming in, and that makes it challenging to get get a card from a traditional bank. Often you're putting personal guarantees on there, all that kind of stuff. So Ramp, Brex, this wave of companies started with this product market fit of like credit cards for startups based on, your bank balance, based on having raised money. Although they sort of evolved very quickly from there into doing more than just corporate cards. So going into expense management, bill pay, procurement, treasury over time. Ramp specifically started out with a slightly modified kind of wedge, which was that It was a credit card that you could get as a startup that would, you know, very little emphasis on sort of rewards or cash back, and more emphasis on helping you save money. So identifying, when you can get a cheaper price on a contract, expense management to help you limit your spend on cards, programmatically give virtual cards with a certain where only certain kinds of purchases are allowed across your team. And that was really their big value prop. And the company has done really well regarded sort of product team, engineering team, and they're as of August this year, they hit a billion in annualized revenue. They just raised money at a $32 billion valuation, so valued at 30x. As you saw from the poll, they're very widely considered to be one of the most exciting kind of pre-IPO companies, taking on some of the sort of biggest names in legacy enterprise financial SaaS like SAP, Concur, Coupa, Bill.com, these kinds of companies, and not to mention Amex.
So they just raised that $32 billion valuation. I mean, that's a pretty monster valuation. Weren't they? They were substantially lower than that, right? Previous to the 32?
Yeah, I'd have to check. I think it was about doubling. I think it was about doubling their valuation from actually earlier this year, like middle of this year.
I mean, that's pretty incredible. What is that, the $1 billion of revenue? Where is the majority of that revenue coming from? What would be the first and second line items on that?
Yeah, exactly. So, the primary source of revenue for Ramp is still going to be um, interchange. So basically, people spending money on cards, they collect a take rate on every transaction that happens on those cards, and their transaction volume is huge. I think roughly like 60 billion for the entire year of 2024. That's the majority, although in recent years, especially over the last year, they've been getting, from our understanding, much more SaaS revenue. So if you, for example, use some of these different SaaS products they have, like Bill Pay, and others, then you're paying an extra sort of monthly cost on that. And then there was a lending product, so there was some financing revenue involved, but primarily the interchange take rate on people spending on ramp cards.
And for perspective, is it fair that Brex is kind of their main competitor at the moment, even though there's a bunch of competition? When people talk about Ramp, they often talk about Brex because they have kind of the same vintage in terms of like their when they went to market. Is that a fair competitor to think about?
Yeah, I do. I think it's interesting. They were much closer earlier on. Their paths have um, sort of diverged, where Ramp is kind of a little more mid-market, startup and mid-market, and a little more of an all-in-one, where you come to Ramp, you do your treasury, procurement, bill pay, expenses. Brex has actually kind of started to go more in um, they do that, but they're also going more enterprise and more embedded. So now you see, like, for example, Brex credit card issuing tech is what's powering the card offerings of Navan and a few of these other sort of really big enterprise financial SaaS. So there is a bit of a divergence. However, it's still sort of the clearest competitor. And then I would say also these kinds of some of these public companies like Coupa for procurement, spend management, Bill.com for bill pay, are more and more competitive with Ramp now.
And then let's say we were trying to get into Brex. Do you have a sense of Brex revenue and valuation at the moment, just for comparison's sake?
I do. So Brex revenue, we actually broke this news at Sacra, was 700 million annualized as of August. So just a step behind, 300 million behind Ramp. Valuation, I believe, is still roughly 12 billion. That's from their 2022 round. So 12, 700. That's about a 17x multiple. So that's rough.
So if it's
Yeah.
possible to get into Brex, potentially it's cheaper at the moment, if it's possible to get into those prices.
Yeah, definitely.
Interesting. We have a question. Do you know Nitra, which is doing essentially Ramp, but specifically for healthcare?
I hadn't heard of it, but it's very interesting. And yeah, I'll definitely look at this. I'm seeing it now that it's expense intelligence payments for healthcare. No, but yeah.
Interesting. So $1 billion of revenue is obviously a company that has some momentum. if you were looking at the legacy players, it's already worth $32 billion. Are they looking to, by 2030 or 10 years from now, be the new Amex? Like, where do you see, um, a market leader? Who do they become if they crush it?
Yeah, it's interesting. They're really going very strong on AI. They were one of the first OpenAI partner companies out there, and it's been a huge emphasis that they have AI agents, that are on the roadmap is basically automating accounts payable, accounts receivable, helping you close your books, managing procurement, sort of a full financial back office suite automated with AI. I think a few years ago I would have thought Amex was, and we wrote a memo about taking on Amex, and that still feels relevant. I think as a corporate card, sort of centered company, everything revolves around the card, right? Every piece of data comes out of how the card is used. So it's still core, and I still think Amex is in that sense like a big competitor to take down. But I think it's expanded to where Ramp might consider, these like Concur and Coupa to be just as big in terms of what they want to be, or what they want to be might even be kind of a combination of those, right? To where they can own that entire market.
What's Concur's market cap right now?
As part of SAP,
Oh, okay,
but
so it doesn't have its own market
yeah,
cap.
they're huge in terms of this like travel and expense. They're probably the biggest, yeah, in travel and expense.
Right, right, right. It looks like 5 billion market cap, and then Coupa public?
They are not anymore. They were taken private for 8 billion a few years ago.
So what are your predictions for like 2030? What do you think ramp could look like? Kind of like a base case or an optimistic case?
Yeah, I think the 2030
Five
base
years from now.
case, yeah, base case probably like a 4 billion. I mean, the growth has been,
4 billion
insane
of
at their
revenue.
scale. Yeah, exactly. Which I mean, they've been growing. They've been more than doubling every year, and they're on track to more than double this year, which is actually kind of insane growth at their scale. But so I think, base case for a 4 billion, slight deceleration by 2030. Um, and then bull case would be, they keep doing this and maybe hit like 9, 10 billion. Um, Base case probably worth like 50 billion, bull case probably worth like 150, which is them, as kind of this like fully automated financial back office,
Sorry, base
powered
case
by
4 billion. Sorry, base case 4
four.
billion
Yeah,
worth 50, so the multiple has come down significantly.
I would say at four in 2030, the growth would have decelerated at scale, and they would be the valuation would be much lower. The multiple would be much lower.
Right, and if they do keep this crazy growth and they do 8 billion of revenue, you think what kind of multiple?
Yeah, I had sort of sketched it as, 8 billion revenue, 150 billion in terms of valuation, which would be like a 19x.
Got
I
it.
think I feel good about
Yeah.
that. Yeah.
Yeah, I guess my key takeaway here is people get excited about Ramp. I think Ramp's an amazing company. I think it's very expensive. 32x is not anything to laugh at. Fintech companies usually don't get these types of multiples, nevertheless, a software fintech. So this is definitely nosebleed territory. So you need to be careful about what you're expecting to happen. So can this become a $500 billion company? It's possible. There's not a lot of that in out in the world for this space. So I think it would really need to lean forward into its AI chops and to really be an AI company around data that happens to have fintech data. But yeah, I think it's an amazing company. Just know that you're coming in at a pretty high price. All right, should we jump into the next company?
Let's do it.
All right, completely changing gears. We're sticking with now more AI, but not just OpenAI. We're talking about OpenEvidence, which is for simplicity's sake, ChatGPT for doctors. I would assume most people have not even heard of this company a few months ago, and now it's throughout the news. Literally last week, talk of it doubling its valuations. Talk to me, Jan-Erik.
Yeah, so open evidence, as we've seen with a lot of, I think, these really standout AI companies, started kind of pre LLMs. So 2017, they were working on basically machine learning that would allow doctors to be able to type in, the essence of a patient's symptoms, what's presenting, and then get some kind of at least a initial stab at a treatment plan or diagnosis by looking through the medical literature, which is, there's a 1.5 million medical papers published every year. The total canon of literature doubles every 5 years. So it's a ton of information. They were working on this search engine chatbot for doctors for years, and LLMs, just sort of accelerated the interest in it and, awareness of what they were doing. And so, a doctor can go in there, say, what antibiotic is best for a patient with, this kind of pneumonia. They have cerebral palsy, right? And it'll put together an answer for them. So this is what was interesting was for them, they really grew through this word of mouth. You had exclusive partnerships that they formed with the New England Journal of Medicine and some other, really elite medical journals, which didn't allow any other apps to train on their data. And that was in large part because the people that ran those journals, the practicing doctors, were using OpenEvidence at work and wanted to make sure that OpenEvidence had the access to the best information at the ready as it was being increasingly used by doctors. So it has been a sort of bottom-up product-led growth success thus far. Yeah, replacing, a bunch of these companies that doctors use. One of them is called UpToDate. They charge hospitals $500 a seat for this kind of like encyclopedia of information from the medical literature that they would use normally to put together diagnoses, and OpenEvidence is free. So a huge difference. They just monetize through advertising, which is, if you know about sort of advertising pricing, these are very high intent physicians who are extremely valuable, which is why revenue growth has been kind of so rapid. They hit 50 in the summer this year, and then they hit 150 just very recently. So yeah.
So what I'm hearing is a AI, let's call it ChatGPT or Claude or Gemini, but specifically focused for doctors. And why is it that OpenEvidence is able to create a moat versus just having these other major LLMs be able to just do copy paste the same thing? Is the simple answer they have exclusive partnerships with these journals?
I think that's a big part of it. I think, there's a reality that OpenAI, for example, at one of their dev days from earlier this year, they talked about going into medical and healthcare more, as something that they wanted to do. And I think on the research side, that's had more traction. I think that with the clinical, like day-to-day decision making of doctors, the trust level with ChatGPT isn't there. It's not there with Claude. And so something like OpenEvidence has been sort of architected around their needs, which means like every single question that you put in comes out with not just the summarized, synthesized answer, but kind of like the thinking chain plus the citations that take you to the actual literature that made it make that decision, which, with ChatGPT today is something that all of that stuff is obscured, a lot of the time. So it's a product that's built for doctors. Another part of it is, of course, this kind of exclusive access. If ChatGPT or Claude's not going to be able to use the New England Journal of Medicine, then it loses a huge degree of usefulness versus something like OpenEvidence.
So I'm really excited about OpenEvidence personally. I think it's an incredible use case, but I'm going to be cynical here for a couple minutes. So one, can't these other LLMs just read all these journals on their own? Or are you saying because of the exclusive content partnership, they're not even allowed to?
Correct. Yeah, they can't use New England Journal of Medicine or JAMA. I think I'm not sure how it's pronounced, but it's one of the other sort of major networks of journals,
Yeah.
that exists. So yeah, they don't have access to any of that stuff.
So that puts a massive, massive, massive amount of power in these content partnerships. If I'm the New England Journal of Medicine or JAMA and I'm hearing that Open Evidence is now worth $12 billion, don't I want like a huge chunk of that value coming back to me somehow because it's my content?
I would say potentially there's a world where they do sort of take a stake in OpenEvidence. I know what I sort of heard about those initial conversations was that you had a lot of AI healthcare companies that were offering New England Journal of Medicine and others huge deals to train exclusively on their data, and they refuse, being like sort of nonprofits, dedicated to medical excellence, they refuse those deals. So I'm not sure if that would happen, but that definitely could be a possibility. And one factor that might help open evidence, because they're probably more likely to do a deal with these journals on that kind of thing versus an open AI, which might not be.
Got it. And then the whole chain of thinking, messing up with a hallucination on my vacation itinerary is one thing. Messing up with a hallucination on diagnosis sounds like a really bad thing. So I understand about the think chain and sharing that, which sounds great. But isn't that really like a feature that Gemini or others can share if they wanted?
Yeah, definitely. And I think it is not a problem that's necessarily solved by open evidence either, which is why if you look at user reports um, on Reddit and places like that where doctors talk about it, there's definitely still a step where there's the double checking if something is even vaguely, sort of, if you're vaguely questioning or skeptical of the result, there's still a double checking process that happens, which is still much faster than consulting a encyclopedia of information to do a diagnosis. But it is still a problem for now, and I think as long as we have language models, probably will continue to be.
They're in talks now to raise at 12 billion, not 6 billion, which they just raised at a couple
Yep.
months ago, right? I mean, it's pretty crazy. And for most people, they've never even heard of open evidence, right? 5 years from now in 2030, is this the sort of thing where we're going to look back and be like, oh yeah, I remember that AI hype? There was even that company Open Evidence that went from zero to, 12, 25 billion, and then we figured out that it wasn't necessary and it got crushed? Or do you think they're going to be some monster company?
I actually do think it's possible that this will be a monster company. And I think because I look at it and I see sort of a, Google-esque company, 90% gross margins because it's just a search, it's just a chatbot and they're printing money, serving up these incredibly valuable ads, obviously growing very fast. And I do think, they were at a 40x multiple before. Now with this potential $12 billion round, which seems likely to happen, it's about 80x. So it is very expensive, but they're also doing kind of Google-esque kind of move and expanding already into other workflows. So one of the most popular categories of AI healthcare product has been AI scribes. And there's several multi-billion-dollar companies in this space, really big ones that are transcribing doctor conversations with patients and turning those into, you know, action items, putting it into the system to be logged and used for billing. And Open Evidence has already launched a product here. They've already launched a dialer product for healthcare physician communication. And so they're really expanding quite rapidly out of pure sort of search and chat and looking to build this kind of like operating system for clinicians owning kind of every layer of this. And I think the ADX valuation is kind of betting on this idea that they succeed there and also are able to move up market into enterprise where once you start selling into hospitals, then you're talking about very long deals but also very very lucrative deals. So I think yeah, a lot of it is a very future bull case, but I think there's a world where in a few years they 10x, they're doing a billion and a half in revenue and much bigger than they are today.
So for Ramp, you gave me your base case, $50 billion valuation, bull case, $150 billion valuation. What's your base and bull on open evidence?
Yeah, I think for base, I might say like maybe a billion. Well, maybe like 750 million.
And what is that
Um,
valuation?
let me see, 750. Let's say well, at 40x, it would be like 30 billion. Maybe if we say it's more like a 30x, then it's 23 billion valuation.
Okay. And what's your
Um,
bull case?
bull case, I would say healthcare is probably still going to be slower than SaaS or AI native startups because of the upmarket, the enterprise slog of those kinds of sales. So I would say maybe like a billion and a half.
And what's the valuation there?
Yeah, let's say like maybe 25x, 38 billion, 40 billion valuation.
We'll round it off about 40. Great.
Yeah.
Yeah, I'm pretty bullish here. I think health tech is a massive industry. Health is a massive industry. One of every $5 spent in the United States is actually on health. And I think AI is just waiting to disrupt that significantly. I don't know if open evidence is the play, but I do like vertical AI. And I think people are going to be surprised when this becomes a monster company. Next one. Apptronik, changing gears completely. So
Hmm.
we've heard of Elon Musk bringing forward Optimus as a robot from Tesla. There's all kinds of other robot companies. This is the Google humanoid bet. So, Jan-Erik, give us some background.
Yeah, from the people trying to cure humans to the people replacing them with robots,
There you
with
go.
Apptronik. Exactly. If you know Figure AI, the $40 billion robotics company, I think of Apptronik as kind of being the anti-Figure, where Figure is very hot and very sort of you know hyped up. They have a lot of great launch videos, demo videos,
And
stuff
very
like very
extraordinarily
expensive,
expensive. 40
extraordinarily
billion.
expensive revenue multiple that might be, sort of scientific notation is required to show it on screen. Apptronik has been sort of the reverse of that. They were founded quite a while ago. I believe it was back over a decade ago, or about 2016. But it was a spin out from the University of Texas, Austin. They did a lot of work early on with NASA. Their initial business was selling actuators, which is a key component of robots and humanoid robots. And they sort of evolved over the last 5 years or so into actually building their own humanoid robots, which the sort of thesis or vision there is essentially that one day humanoid robots will sort of take over for a lot of the industrial, commercial, warehouse, defense related tasks for which humans today are necessary. And yeah, one of the things that really stands out is, Apptronik being Google's exclusive humanoid robotics partner for Gemini robotics, which if you know Google, obviously they invented the transformer architecture. They've done a lot of really foundational work in physical robotics and AI as well. And so it's definitely a sort of great partnership. And I think positions Apptronik very neck and neck with a lot of these companies that might be more hyped, like Figure or even Tesla Optimus for the future, which, if they succeed, will involve a lot of robots in factories.
So figure like you mentioned, 39, 40 billion, massive valuation. Then you have Optimus Tesla, you know, embedded in a massive valuation again. Why is Apptronik not a quote unquote massive valuation? Or are we splitting hairs? It's 1.5 going up to 5 billion potentially right away, or it's already at 5 billion. Is it at a massive valuation and we're just like not appreciating how ridiculous some of the other valuations are?
I mean, it depends on how you feel about, valuations with zero in revenue, which is effectively what all these companies are at, given the fact that there's very, very few pilots, even ongoing. I mean, there, are much promoted and scattered pilots going on with various companies. But I think Apptronik, I mean, my interpretation is that they are staying away from this sort of potential spiral, raising too much money at too high of a valuation, and then not being able to deliver on the timeline sort of necessary to justify that. The timelines in humanoid robotics in general, I think, are quite hard to predict, because the CEOs of these companies might tell you that we'll have millions of robots in factories by 2030. Probably a lot of people would say that that is a complete fantasy. It's going to take longer. It will happen, but it'll take longer. So I think, yeah, 5 billion, 5 billion is a reflection of the team, sort of technology they've built, the potential of the market to be massive, and not so much related to, yeah, fundamentals of revenue or free cash flow, but definitely a slightly more conservative figure. It may be remembering the lessons of 2020, 2021, and SoftBank, and where raising the most capital doesn't always ensure success, even in like capital constrained hardware type spaces. So yeah, just my thoughts.
So, do we think there needs to be only one winner or a Coke and Pepsi situation? Or can this be the car industry where there's going to be many players? So, potentially, Figure, Tesla, and Apptronik all become, let's call it, successful companies. And obviously, there's going to be other competition from, China and other countries and other robots.
I definitely think there can be multiple winners. I'm not sure that it's a situation where there's any overwhelming kind of like economies of scale especially in the physical manufacturing side. And I also think that there's sort of it's a problem where there's a lot of different dimensions between different kinds of commercial environments, different kinds of, you have warehouses, where, like, for example, the tasks are like picking up boxes and moving them. You need mobility. Then there's industrial, auto manufacturing um, has been a big space here. So that requires a lot of precision work. I think there's a lot of different form factors for the robots. There's robots on wheels, robots on pedestals, on legs. There's a lot of variation. And I feel like there's not much for me to look at and say that only one of these companies can win, just because it seems to be such a wide variety of use cases. Also, defense is a big one. So, yeah, I would be surprised if that were the case.
So very binary. If my public option is to invest in Tesla. If my private
Mhm.
option is to invest in Apptronik or invest in Figure, I can invest in Apptronik at 5 billion or Figure at 40 billion. Why invest in Figure? Give me one reason for that. And then why invest in Apptronik? Give me one reason for that.
I think for Figure, your argument is that they have the largest war chest, and this will be a very expensive kind of space to be number one in. And your argument would be that you need to be number one in terms of access to capital and potentially access to talent, via sort of being more well known if you want to win. I think with Apptronik, the argument is you want to have some kind of exposure to the upside of humanoid robotics, and you want it at the cheapest sort of possible price, where it's also kind of more plausible that they'll succeed. And given the sort of Google partnership, you have some institutional approval or vetting of the idea. I think in that case, you would be more inclined to go for Apptronik.
What's your prediction for 2030? What's your base and bull case here? Today worth $5 billion.
I'm not sure
You obviously can't use your revenue.
personally. Well, I mean, let's say that we were starting to see robots getting deployed, let's say across automotive and logistics. And we start seeing actual robots coming out. I would say that, like, Apptronik, I could see them at the sort of figure figure valuation levels in the sort of bull case, most likely. Um, and then probably more like doubling or tripling from here to like a 10, 15 billion in more of the base case, just assuming there's continued progress and deployments, and that, the general interest in the space is still there.
Got it. So your base case, if you did get in at 5 billion, you might get to 20 billion on a base case, is your opinion.
Yeah. Yeah, I think so.
Cool. Yeah, I'm actually a fan of Apptronik. I think that, humanoid robots are here to come for the sure. Like, I don't think it's a fad. I do think we're not getting it tomorrow, but I think by 20, if you can afford a $100,000 car, you're going to be having a robot. And I think that the $40 billion valuation is just so high, in my opinion, for Figure, that I do like the attractiveness of the 5 billion entry point. I don't really see it being an 8x difference of company, but they do have an incredible CEO at Figure, so that is definitely one of the main reasons. Let's move on to the next company, Whoop, which probably most people on this call have not heard of or used. What is it?
Yeah. Uh, um, it's essentially a Shopify, and you mentioned, kind of Gen Z marketplace. It is very Gen Z focused. It is a digital storefront. A lot of what you'll see on there, and it was actually founded by people who made, a lot of money doing. Uh, so there's like sneaker reselling, where you buy valuable sneakers as they drop on the web, and then you resell them to others for more money. And they built bots that would help you do so programmatically. And they launched Whop, and a lot of the early usage of Whop was for people to sell these sneaker bots to other people who wanted to make money. And it has sort of grown from there into a lot of others, these sort of gray market gray market skews, like sports betting communities, trading communities, crypto especially has been a big one. Um, and then also content creators on TikTok, YouTube, who want to pay other people to turn their content into clips and then share it for more eyeballs on social media. And so those people can get paid through Whop for doing that based on the number of views that they generate. So, and then there's other kinds of businesses, but those kind of represent a large portion of what's on there right now. And essentially, it's stuff that is sort of outside of the mainstream. So you actually will have trouble, kind of building one of these kinds of businesses if you go onto a Shopify or even a lot of these traditional creator economy platforms that are out there. And then they also have a payments layer. So they recently migrated off Stripe because they were having issues with creators getting their accounts shut down. So, PayPal, Stripe might, not want to support a lot of businesses like this, but, they sort of have a way now on Whop to build a business, engage with their community or their customers, and also get paid through there. So very much sort of Shopify-esque.
Yeah, so I just want to make sure we're understanding here because, I'm a bit older, so this is a novel concept. So I always like to be curious. So Shopify obviously is this massive platform that allows anybody to create a storefront to sell real stuff. And when I say real stuff, I mean like an actual surfboard, actual glasses, an actual shirt, where you physically has to then be sent to you, and the UPS or FedEx, puts it in front of your house. Here, and there's all kinds of digital marketplaces as well where you can learn courses or you can get taught something. Here, this is these digital products that are somewhat niche communities, or a bit shady even. And WAP has figured out how to become the marketplace for that. What I would compare this to, this is not exactly that, but if people are having a hard time grokking why anybody would pay for these things, I think it's similar to, it used to be that, oh, I want a toy, buy me this toy for $50. And then starting 15 years ago, young people were like, I'm playing a video game, buy me this skin, right, for this avatar or for this player, or I want to buy this sword, which is a digital sword that I had to pay $50 for that sword. And the parent was like, what are you talking about? You're paying $50 for a sword. And then the child was like, I need this sword to go into the next level, blah, 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 blah. I consider this the same thing, which is really, these are like digital products, digitally native products that most people here probably don't interact with very often. But the young people are creating a community of wanting to get access to these things, and there's not a centralized place for these sellers, and WAP has become that. Is that fair?
Perfect explanation. Yeah. So I think one of the big factors is that Whop makes it incredibly easy, much like Shopify did, to build this kind of business because it contains everything that you need. So there's kind of like the storefront where you have a bunch of SKUs. You can purchase access to a Discord community or purchase access to courses, videos, ongoing communication and forum discussions, that kind of thing. You can do everything to sort of run your business on Whop. There's even like live streaming for people who are coming from live streaming communities on Twitch and other places. So there's it's a very strong all-in-one value prop for these kinds of hustlers who are making money here. And then I think the other thing is sort of zooming out a little bit like you did. This is really a sort of Gen Z phenomenon that is, or WAP is kind of the embodiment of this much larger phenomenon, which is Gen Z is obsessed with sports betting. If you look at Kalshi and Polymarket, blowing up with betting on sports, day trading, with Robinhood, crypto via, exchanges, but also like meme coins and Pump That Fun, trading cards. You have Whatnot, which is a company maybe we'll cover in the future, but all these kinds of, very dopamine driven, short term kind of money making opportunities are all the kinds of things that are being productized on WAP into a trading circle. So I'll tell you what sports lines to bet on, or I'll give you good ideas for day trading. I'll teach you how to flip cards, resell cards to other people, show you how to make viral clips. It's really is pure distillation of that sort of Gen Z interest in these kinds of financial products and financial entertainment products turned into a storefront.
So does this become $100 billion business like Shopify?
It's a good question. I think they were the least optimistic one in the poll we did. I think one person said they were super bullish. Um, I think if it remains sort of as gray market as it is, I think that's problematic because I think we're still sort of yet to see like what the retention looks like on that. How quickly does this sort of go out of style? If it does, which I think is very possible. there's a world where it becomes a, I think $2 billion company in the next several years if it sort of becomes a much broader um, Gen Z kind of digital storefront, really a Gen Z Shopify where it's not just kind of um, this kind of gray market of digital products, but um, more of a broad, like you said, courses, things like that. I think it's possible. But I think, yeah, the gray market thing is slightly what's concerning to me.
Yeah, I agree. If it's, I mean, we're talking about an $800 million valuation, so we're not even talking with a B,
Yeah.
right? So every company we
Yeah.
typically talk about is in the billions. So this is quote unquote a bit early. So there's definitely more risk. Could this become a zero? I definitely think it could become a zero. Could this become a huge company? It definitely could become a huge company. If you want to play the optimistic narrative, you could just say that just the way Shopify rode the e-commerce boom and they were the right
Mhm.
company at the right place at the right time with the right products, you could say Whop is riding the prediction markets, the sports gambling, the crypto, the social media, the alpha seeking kind of trends. If all of that continues to become more digitized products that people are going to want to try to get access to and not have to deal with shipping, right? Not want to deal with the actual last mile delivery, then Whop has an opportunity to potentially keep on growing while all those other markets keep growing. That doesn't mean that I'm just running to put in money into this company, but that was the optimistic narrative that could a $5-10 billion company come out of that? I think the answer to that is for sure yes. Are they the company to be that? And is that going to happen? I'm not sure, but that is in my positive narrative. What is your base case and bull case in 2030 for Whop?
Yeah, I think my base case is like maybe I'm going to assume that this trend has momentum and they can hit, 500 million, roughly 500 million by then, maybe, maybe valued at 4 or 5 billion.
Got it.
I think
And
is my base
and
case.
and what's your bull case?
Bull case, maybe slightly less likely than some of the other bull cases to me, but I would say, maybe in the billion, 1.5 range. Um, Again, and maybe put them, yeah, at the 10 billion, 15 billion valuation. Well, the other thing I wanted to say, it goes along with what you said, is that there was a very large sort of community that was shorting Shopify and was very bearish on Shopify early on.
And
Or
Amazon.
even, yeah, and Amazon. I'm trying to remember who this guy was. He got in trouble for um, shorting. It'll come to me as soon as we're off this call. Andrew something. But the essence of it was that there was a lot of this kind of scam looking behavior on Shopify via people who were using their affiliate codes, trying to teach people on YouTube how to do, drop shipping on e-commerce, kind of this very low, not really a real business, but just sort of making get rich quick schemes, that kind of thing. And that had a real, foothold on Shopify for quite a while, but it didn't preclude a real business being built, and also real businesses being built on top of Shopify. So that's definitely possible, that happens. I think I would just have to see more evidence that those kind of more traditional digital commerce businesses or less gray market ones are maybe being built on Whop just to give it some more diversity.
I completely agree. Next company, our final company, the world of defense tech. So Shield AI.
But yeah, yeah. So everyone knows, Anduril, one of the biggest kind of private companies, and especially the biggest name in defense. So where Anduril is kind of building this replacement for Lockheed Martin, or Raytheon, doing everything from drones to anti-drones, ground vehicles, sea vehicles, software. Shield AI has really focused 100% from the beginning on building drones and building the software for drones, and specifically drones that can operate in places where GPS access is not reliable or can be jammed. Which, if you look at Ukraine, Russia, that's kind of the daily reality there, is that drones are the number one weapon, but they can sort of die very easily when they're jammed. And Shield AI is also not looking to replace the primes or become the next Lockheed Martin necessarily. They are more building software to operate inside everyone's drones. And so they've worked with and partnered with Airbus, Kratos, L3 Harris, various other companies in the space, sort of using their software in these companies' drones, building a sort of software-like business at the same time that they are competing on, physical drones as well.
Yeah, I mean, not as well known as a company as Anduril, but seems to be doing incredible work, has really strong revenue traction. Valuation seems very fair at 20x, having done around $250 million of revenue in 24 and valued at just 20x that with a $5 billion valuation. I mean, that's quite fair. I mean, if you believe that drones are our future, Shield AI is an excellent way to play it. There are some other ways to play it, but this is definitely a pretty decent value opportunity. I mean, personally, I'm quite bullish on drones and defense tech for drones and even dual use for drones. I think the software needed is only going to continue to be stronger and more important versus the actual hardware product itself. So I think Shield AI is a really interesting opportunity. It'd be different for me if it was coming in at a 50 or 80x valuation, which the Andurils of the world are going to be much higher valuations, but they also have much bigger visions. So, I mean, I think this is an exciting opportunity. What's your base case on Shield AI in
Yeah, I think
2030?
exactly. I think base case would probably be, yeah, probably roughly in the one uh 1.5 uh 1.5 billion range, which would, come out to like a 30x or sorry, $30 billion valuation. Then bull case might be more like, we're in the like 3 billion range, let's say. Maybe like
And
50,
well,
60 billion.
nice. So there's a
Oh,
lot of
sorry.
opportunity
Yep.
for you
Mhm.
in Shield AI. All right. Well, now that we've gone through the five, I'm just going to ask for one quick vote again. So based on your what you just heard, if we could just put up the poll, what are the two companies, just the two, what are the two companies you're most interested in investing in? If you had $100, $1,000, or $1 million that you could invest right now, we gave it to you available to invest into all five of these companies. Which two would you pick based on the valuation and 2030 exit? So we'll give everybody 30 seconds. All right. What are the results? And then I'm going to ask you, Jan-Erik, to give me your order of your five. And if we can go back to the slide with the five companies on it so Jan-Erik can see the five names, that'd be great. So
Well,
our
I like that
results,
our one WAP person stuck to their guns, and I'd love
I
to
love
hear.
it. Go Whop person. Nice.
Yeah, yeah,
Apptronik
yeah.
moved up. Shield AI moved up. Very interesting.
Hmm.
Ramp moved down. Interesting. So people are thinking it's expensive. Awesome. So today you have $100 or $1 million or $1 billion. Jan-Erik, in order, what are your five from one to five? Where do you put that money?
I think for me, it's Ramp at the top, OpenEvidence. I think it's OpenEvidence second, Shield AI, Apptronik, and then WAP. I think is my list.
Sorry, Shield AI was four for you.
Three.
So say the order again. It was Ramp.
Yeah, Ramp, OpenEvidence, Shield, Apptronik, and WAP.
Got it. Yeah, I'm gonna go OpenEvidence. Number one. I'm going bold.
Mm.
I'm going Shield AI number two. I'm going Ramp number three because it's expensive for me. Apptronic number four, and then Whop. I do think that Whop can surprise us significantly. So it's just interesting, even based on your base and bull cases, the place where you gave the most amount of opportunity was actually in Whop and Shield AI, just so you know, versus the current price. All right, we're wrapping up here. Let's go to our disclaimer slide. So nothing in this presentation should be construed as an offer to sell or offer securities or solicitation of an offer to buy securities. All investments involve risk and the possibility of loss, including loss of principal, and neither past performance nor forward-looking information is a guarantee of future results. And then some more disclaimers. The Fundrise Innovation Fund offers exposure to over $200 million of venture opportunities across some of the most exciting industries. Visit fundrise.com/Vincent to learn more about the Innovation Fund's portfolio companies and flexible investment minimums. Investing in shares is speculative and involves substantial risk. You should purchase shares of this closed-end tender offer only if you can afford a complete loss of your investment. The fund's portfolio is concentrated in technology-related securities, which can carry greater risk than a more diversified portfolio. Technology companies are subject to risks like rapid innovation cycles, product obsolescence, and intense competition. Investors should consider the investment objectives, risks, and charges and expenses for the fund carefully before investing. Information regarding this, considerations, and perspectives can be obtained at Fundrise/Innovation. Investors should read this perspective carefully before investing. Awesome. With that all said, thank you everybody for joining. Have happy holidays, and we will talk about more pre-IPO companies in 2026, which might be the year of the pre-IPO, the IPO. All right. See
The
you, Jan.
IPO,
Bye.
exactly. Thanks.
Bye.
Bye.